Hello, everyone. You're welcome. Good evening, all. Good evening, traders. Good evening, everyone all over the world. Yeah, welcome to Helpens Crypto Academy. You're welcome to today's. You're welcome to today's class on understanding correlation in test trading. Before I continue, I want to really apologize for the delay. I was having a technical issue. The network was bad. That's why we did not start early as scheduled. But notwithstanding, we are still going to cover what you're supposed to cover today. So last week we talked about um, understanding correlation in pest trading. Understanding correlation in pest trading. So today we're going to be talking about. We are going to continue pick up from where we stopped last week and um, continue from there. So last week we talked about um, we defined what correlation is. We looked at the type of correlation, and I give us some chart example of a type of correlation, which is positive correlation. So today we are going to continue from negative correlation. But a brief recap for those who are just joining. So let me um, explain what correlation is in practical terms. Okay, in practical terms. So let me have a line like this. Let's say a graph x and y. So this graph, let's say for example, we want to measure um, the amount of the correlation between um, the number of people that bought a raincoat, that is sweater, and the number of days or months that rain falls. Okay, let's say we have on the y-axis, this is the y-axis, and we have the x-axis, this is the x-axis. So we are measuring correlation is, like I said last week, that correlation we are comparing two things together. So in this example, I want to use an illustration of when rain is falling, the period when the season when rain is falling, people tends to buy sweater more than during the during the time when the rain is not falling. So we are measuring the correlation between the rainfall in a particular month, the rainfall in a particular month. I want to write it down. Rainfall, rainfall, and sweater. That is raincoat. Okay, raincoat. So we are plotting. I'm plotting um, the amount of rainfall in a particular month with the number of people that bought raincoat or sweater. Let me put raincoat so that it's easier. Raincoat. Since I keep mentioning raincoat. So let's say raincoat. Coat. So correlation, you are comparing these two factors. So let's assume that we have um, the number of people that bought raincoat as rain keeps increasing. As rain falls in a particular month, let's say um, in the month of January, we have this. So we have February rain increase. In the month of March, rain increase. We have rain increase like that. So different months, rain keep increasing. So the same way, people that are selling raincoat, the same way as rain is increasing, people that are selling raincoat are also making more money, buying more raincoats because they know that people will eventually come and buy raincoat because it will be cold. You understand now? So correlation, we are measuring two things together. We are measuring two things together. So I just hope you get what I'm trying to do here. So as rain increases, the number of raincoats that is bought in that particular month will almost be correlated, that is the term, yes, correlated with it. The number of raincoats that is bought in that month will be correlated with it. So if now we are plotting this um we are plotting this the graph of this um relationship, we'll be having um we having this. I want to make sure that they touch each other. The number of touches. The number of touches. Normally, you are supposed to start from zero. You're not supposed to start from zero. But we want to know how many touches we have. The correlation, is it positive or negative? Okay, is it positive correlation or is it negative correlation? The amount of rainfall that fell and the the number of codes that is bought in each month. What is their relationship? What is their relationship? So that is what we are trying to get. So correlation is the measure of um, the correlation is sorry about that. So correlation is the tendency of market to move in the same direction. So we are comparing two things together and we are looking for how they are correlated, the relationship between these variables, how correlated they are. So that is correlation. This is the practical example of what correlation is. Now let's go to forest market. Let's go to forest market. I want to delete all of this quickly. I want to delete this. 1 minute. Okay. I want to delete it. Now, last week I was talking about types of correlation. Let me quickly write types of correlation. Types of correlation. Correlation. We have one positive, positive correlation. We have two negative correlation. Negative, yeah, negative correlation. And we have the third, the neutral. Yeah, of course, neutral correlation. We have no, I don't like black. Okay, we have these types of correlations. We have these types of correlation. we have the positive correlation, we have negative correlation, and the neutral correlation. So I was explaining to us, how I explained to us what positive correlation is last week. Because of our time, I will not talk much about positive correlation today. I will be looking at negative correlation and neutral correlation. So last week I said positive correlation is when two forex markets, two forex pairs, they are moving in the same direction. When two forex pairs or forex markets are moving in the same direction. So today, quickly, I will be talking about negative correlation. So pair or when is pair said to be negative correlated? So negative correlation is basically the opposite of positive. In the opposite of positive in the sense that forex pairs, they move in different directions. So when forex market, when for example USD JPY and CAD JPY, when they move in the opposite direction, pairs that move in the opposite direction, they are said to be negative correlation. Now, the example I just gave is not a perfect example of negative correlation. So let me just draw it here. So we have this, we have a pair that moves this way, and we have another pair, we have another pair that move just opposite. We have another pair that move just opposite. Okay. So these two pairs are said to be negative correlated because as one moves up, as one goes up, the other one comes down like this. So this pair, for example, we have a perfect example of a negative correlation is Euro Euro AUD, and we have Euro AUD and AUD NZD. So these two pairs are negative negative correlated. They are negative correlated. We're going to be looking at this in the chart quickly. Like I told you, we are going to be looking at chart example of negative correlation. So we are going to be going to the chart and be saying this by ourselves, how these pairs are negative correlation or different example of negative correlation correlated pairs. So negative correlation is when two pairs are said to be negative correlated if they are moving in different directions, if they are moving in the opposite direction. So when one goes up, the other one comes down the same way like that. So we are going to go to the chart quickly and see this example for ourselves. So we have the first the first pair is Euro AUD. Euro AUD. That is Euro FX slash Australian dollar is an example. So the second pair that negative correlated with it is AUD NZD. So we are going to come to this page and say compare. Yeah, this positive sign symbol, compare or add symbol. We are going to click it and type AUD NZD, same percentage scale, same percentage scale. So let's look at this page. Let's look at this page. Just me looking at it, you know that they are negatively correlated. This 12 month time frame. Let's look at um, monthly time frame. Monthly, look at if they are negatively correlated, perfectly negatively correlated. Look at when this pair, which is AUDSZD, was going up, at the same time Euro AUD was coming down, up and down. So this is a perfect example of negative correlation. Now let's look at daily time frame. Daily time frame. Okay, let's start from here. Starting from here, so much drawing. Okay, from here, you see that when AUDNZD was going up, at the same time Euro AUD was coming down. So this is a perfect example of negative correlation. Let's come in and see. This was pushing up very aggressively. It was pushing up while this was moving slowly. Even at the time, it came down opposite each other. Look at this. It was going up while this was coming down. Then later follows follows suit. So this is an example of negative correlation or correlated pairs. Example of negatively correlated pairs. You can look at another example of negative correlated pairs. Let's look at Euro USD, Euro USD, Euro USD, and let's look at dollar index DXY. So DXY is negatively correlated with Euro USD. Okay, let's see how true is that. As you can see, perfectly negatively correlated. They are perfectly negatively correlated. You can see when DSY, which is dollar index, was moving up, at the same time Euro USD was coming down. It's an example of negative correlation. Negative correlation. This was coming down, at the same time this was going up. So it's an example of negative correlation. So we are also having it there. This was going up. When this was going up, um, Euro USD was coming down. So this is an example of negative correlation. So when pairs are moving in the opposite direction, when pairs move in the opposite direction, yes, those pairs, the two pairs are said to be negatively correlated. A negative correlation or correlated pair, their coefficient, their correlation coefficient is normally -1. Okay, correlation coefficient is -1. Yes. So what do I mean by correlation coefficient? You might be wondering, correlation coefficient. I've never heard that kind of term before. Correlation coefficient. So correlation coefficient is simply the measure of the strength of the two pairs. The measure of the strength of the two pairs. The measure of the strength of the two variables that we are comparing them. So we have let me quickly show us. We have um 1 minute. We have look like PSK. We have P. We have so this is zero, which is no correlation. and we have strong, strong negative, strong negative, strong negative. Yeah, correlation coefficient is negative, strongly negative. We have strong positive. Yeah, positive. So at this side of the of the scale is a strong negative correlation, which is minus one, minus one. The strong negative is minus one. The strong positive is plus one, plus one. While zero is no correlation or neutral, no correlation or neutral. So this is correlation coefficient for positive correlation and negative, for positive correlation and negative correlation. Then we have neutral correlation, which is zero. Neutral correlation is zero. The correlation coefficient of neutral is zero. So it means there's no correlation at all whatsoever. So last week I was telling us what neutral correlation is. I said two pairs are said to be neutral when they don't have any relationship at all. So if one is going up, it doesn't really matter where if the other one is coming down. So there's no correlation, there's no relationship at all. There's no relationship at all. So let me show us another example of negative correlation. Another example of negative correlation is this pair is perfectly negative correlation. Very perfect. You can see this guy it moves up. Euro USD moves up. YDSY was coming down. This is an example of negative correlation. So neutral. Okay, I said I was going to give us another example. Where push pounds USD is another example. So with dollar index it's also negative correlated. Dollar index is negative correlated with GBP USD in the sense that when GBP USD was coming down, was down, Euro USD was moving up. So this is the negative correlation. Now quickly let me look at neutral neutral correlation. So neutral correlation example in the chart would be um card GP1. Like I said, a neutral correlation is they don't have relationship whatsoever. It's AUD, AUD, NZD, AUD, NZD. You can see this. This was coming down, but this other pair was not even going up or going down. It's more like ranging here. When this was coming down, the other pair was kind of ranging. It's not going up, it's not going down. Same thing, same thing here. So this is an example of negative correlation. Look at this was kind of ranging, while this was going down, going down. So this is an example of negative correlation. We are not going to be using negative neutral. We are not going to be using neutral in our trading. Of course, we are not going to be using neutral in our trading. We are going to be using mainly the positive correlated pairs. Yes, positive correlated pairs. The ones that move together, pairs that move together, like um, USD, you know, like AUD, JPY, AUD, JPY, and NZD, JPY. So this is another example of positive correlation. So we are going to be using positive correlation in our trading, in deciding when to trade and when not to trade. So this pair is positive correlation because they are positively correlated in the sense that they are moving together. So our time has gone, and I'll be wrapping up from here. I'll be wrapping up from here. So before I close the section for today, I want to remind us about our program, Helping Store, that is happening at Asaba. Helping Store that is happening on Sunday in Asaba. On Sunday. Sorry about that. We are having a program at Asaba this Sunday, Helping Store. So we are inviting everyone who any those people that are staying in Asaba. If you live in Asaba, you have friends in Asaba, you can invite them to come to our program, Helping Store, this Sunday, and come and experience a new way of making money, investing, and trading. So, like I was saying, first trading is a new way of trading the forex market. If you have been a directional trader before now, the method you have been using before now is the old method, and this old method you are losing your money consistently. So come and learn first trading. First trading is a new way of trading the forex market. So it's, it's like having an investor mentality. You are investing your money. So first trading is like you investing your money in in you're investing your money in forex market, just like land. You leave it for some time and it will grow. So the same thing applicable to first trading. So I will encourage us to take up the class to come and learn and make money. Yeah. So dollar is now expensive now. So the best way to live in this type of country called Nigeria is to be earning in dollar. Of course, you want to be earning in dollar. You want to make sure that you are earning in dollar. So thank you once again for joining the class. My name is Victor. I'm from Helpens Crypto. Of course, you know. So okay, rounding up again. Thank you once again. Until next week. Bye.